Hey everybody, what's going on? John here. Are you curious about margin? I know I am. Do you use margin or do you even know what margin is? Well, I actually have used margin in different ways, certainly over the years, over decades, right? And margin is something that I would say most of the time in the financial community when looking at what Warren Buffett says and what Kevin O'Leary says, and these people that have tremendous amounts of wealth that either appear on CNBC as a guest or appear on CNBC as a contributor, uh, they'll say that it's not a good thing, and I understand why that is, right? But in case you don't know what margin is a way for you to basically borrow against the value of your securities so as to use cash if you want to just take that money out and use cash, or if you want to increase your investments so as to increase your returns, right? The thing that I believe is helpful about margin is that it typically is a much lower percentage rate than credit cards, right? So if you are in a situation where you kind of have debt, you have a lot of debt, credit card debt or whatever, you're paying very high interest on that. I mean, some of that is 20% or over 20%. And then I think if you're lucky, some of it's going to be 15%. And that's just the reality of credit cards, right? Or even personal loans are pretty high. Some of them can be pretty low, right? Below 10%, but most of the time personal loans are going to be, in that, 5% range all the way up to, 16 or 17%. And then if you have credit that's not good, average or below average credit, that could even be a higher interest rate. So the great thing about margin is, number one, again, most of the time, don't quote me, but the reality is most of the time, if you can stock away in a brokerage account, for example, with Webull, I think you can deposit $100 to start your account. With Robinhood and M1 Finance, you can start your accounts for really as little as like $100 or a couple $100, and then go ahead and apply for margin. Now they're going to have their own criteria in terms of how much you need, but it's really not more than a couple $100 to start applying for margin. So when you do that, you're going to get access to margin. Those interest rates are going to be pretty low, right? Anywhere 5%, 8%. They're going to be way lower than 10%, right? And even Robinhood, I think, is actually, I think Robinhood might be higher than M1 Finance, but it's still going to be around 5%. And when you do that, you're getting an interest rate that's much lower than credit cards. And if you put together a very realistic and dependable investment strategy, let's just say the S&P 500 index funds, you just go for, let's say, VU, just an index fund that just focuses on the S&P 500, and then you can borrow against that. Well, what you're doing is you're borrowing against an investment that's appreciating, and you're getting a much better interest rate than a credit card. So if you're somebody who is needing to kind of get out of the trap of high interest credit card debt, it is a great way to get into getting into investing, and then also taking some of your debt and applying it to some margin. But anyway, so what I have for you today is a clip, and this clip is a clip on CNBC, and they talk about how margin levels have hit a record high. Here we are at the time of this recording. It's Monday, December 28th, and margin levels have hit a record high. And I feel that it's a very interesting thing to share because the stock market is very high. It's come up a lot since it went down to its lows, to its 52-week lows, which was in March when the pandemic was first kind of announced as a pandemic in all these different states. I live in California, and California had a lockdown, and then some other states in the country had a lockdown as well. So let's go ahead and take a look at the record high that these margin rates have hit.
The Wall Street Journal today presented it as a question of whether investors are getting overconfident. This little jump in margin debt that we saw. This is the orange line going back 23 years or so. You see, margin debt more or less tracks the S&P 500. I mean, the equity market cap of the country is the collateral for margin debt. Typically, it runs 2 to 2.5% of total market cap. That's what margin debt is. So it's not out of whack right now. In fact, what's interesting is that we didn't make a new high in margin debt for this entire period of more than 2 years. If you go back here, that's May of 2018. Since then, the S&P 500 is up something like 35%. Total margin debt from here to here is up only 7%. So maybe it develops into a problem. Maybe this fits in with a lot of other indicators of heavy speculation going on right now. But in itself, it's more of a coincident indicator and tells you that the market's been rallying and the value of people's portfolios is higher. They're willing to take on some borrowing against it. Doesn't, to me, tell us that there's a particularly vulnerable condition right there in the markets.
I love when you debunk the Wall Street Journal's main stories.
Whenever it merits.
We should just have a daily segment. What does it tell you, though? So it's not so much vulnerability. What does it tell you, though, about how exposed people are to things like leveraged ETFs and other ways that they take on this debt?
Yeah, that doesn't actually get measured in here. So I could point to a lot of other things, certain types of ETFs that are basically pure momentum and pure daily leverage. That stuff has looked a little bit crazy. Look at all the huge volumes in call options. Those are inherently leveraged instruments. So you pay a small amount and you get exposed.
So when he says call options, he's talking about options, options trading. I don't cover options tradings in some of my material that I cover. I don't really actively participate too much in options. I have in the past, but don't really do that as much anymore. So basically, there is a little bit about margin. So basically, in case you aren't familiar, I did do a little explanation at the beginning of this video. But I think that there's going to be a lot of folks that are financially secure and, let's say, high net worth that are going to really get rid of their margin. And that's a great idea, because even Warren Buffett has said that margin is great on the way up, but it's terrible on the way down. And if you do start to margin up and you start to just to give you an example, I have an account at Merrill Edge, and at Merrill Edge, what they say is the maximum amount that you can get leveraged is where you have 30% equity in your account. What that really means is, let's say you apply and you get margin, right? You get that margin, and then you start buying more shares of stock because your stock's doing well or whatever. So if you have let's say $100,000 of priced investments, that means that $30,000 is your equity, right? So that's the actual maximum that they would allow you to be leveraged. So in that example of $100,000 of priced investments and $30,000 of that $100,000 is your equity, that means that the difference, which is 100,000 minus 30 is 70,000. That means $70,000 is actually borrowed money, right? And you're paying an interest rate on that to actually borrow it. But that's the maximum amount of leverage or minimum amount of equity requirement that they would require. In the case of a market going down or a market crashing, let's not even say a market crashing. Let's say your investments start to go down, and then if you slip below that 30% minimum equity threshold of 30,000, they're going to do what's called a margin call, in which case you'll have the opportunity to sell the positions that you want to sell. If you don't sell the positions that you want to sell in a matter of 2 to 3 business days, they will sell them for you. So the brokerage firm will start selling positions on their own so as to reduce the actual leverage that you have in your portfolio. So a lot of times when there's a market crash and there's a lot of margin debt out there, it actually kind of doubles the effect of the crash, at least for those that have margin, because that's just the nature of it. You really only have 30,000 of equity, and then you've got 100,000 of price investments. So if it goes down 10%, right, that's $10,000 in real value. So your $30,000 net equity is going to go, if it goes down 10,000, then you're going to go from 30,000 to 10,000. Whereas if you didn't have any margin at all, you would be losing quite a bit less on the way down. So definitely you need to know what you're doing. It's your decision about margin, but at the same time, if you're somebody that is struggling with credit card debt and you don't have a whole lot, you can start investing, and you can start doing well with investing, and it can be a way for you to kind of get out of your credit card debt by using margin. Okay, hopefully you guys like that. If you have any questions about margin, just put them in the comments below. What I'd say is, if you aren't already, you can generate leads, generate profits, generate income from your social media profile. I've got a program. It's called Profile Profit Machine. You could partner with me and the world record holder for the fastest website funnel to hit $1 million. That record is 28 days, and it's really kind of a very groovy online funnel that you could go ahead and you could clone, and you could make your own with as little as 90 minutes of training. And the great thing about it is we've actually built this funnel. Our group has got over $17 million in revenue that we've generated from our funnels. So it is definitely a very well architected and well constructed funnel. And you would go ahead and you could just go with, like I said, with 90 minutes of training, you could make it your own. Also, I came out with a wealth and instant credit blueprint. That blueprint is 63 pages plus, and it's only $7. Okay. In that blueprint, I cover investing, I cover online income, I cover credit, of course, 5 guaranteed credit cards, and then I cover business credit and financial independence. Okay, so if you have any questions, let me know in the comments area, and best of luck to you with investing and margin.